Hello guys, so on today's video we are going to measure on technical analysis. As you know, in the forex market we have three types of analysis, which is the technical analysis, fundamental analysis, and the sentimental analysis. But for today we are going to measure only on technical analysis. So as you can see on the screen here, I have a trading view which is used by traders to analyze the forex market. So in this case we are going to analyze British pound, Japanese yen. So for you, first of all, to understand the basics of technical analysis, you have to know and understand that the markets move in trends. So for example, when a market is bullish, which is buying, it moves in this format, up and down. So the market does not go straight up, it has to go forming pullbacks and uptrends. Those, in this case guys, this is an uptrend. So as you can see, the market does not go, if you check on the screen right here, you can see from here GJ was going up, down, up, down, up, down, up to this point. So it's forming higher highs, lower lows, higher highs, lower lows, higher highs, lower lows. So in this case, this is what we call an uptrend. So from here we can say that GJ has been buying all the way from this zone here up to this zone up here. So in case you want to trade, then as a trader, your point is to come and analyze on where to get in the market and where to get out. So in this case, for example, if you're talking about technical analysis, you can see that by identifying the highest point that the market reached at this point was 184.940. That's the highest point of the market. So currently on GJ, so this is on the daily time frame. Then the lowest point we can put is like a zone. We can put that zone there. If you see here, we have another zone there. So basically that's the higher time frame. You can see it has been moving up. So if you go back to the 4-hour time frame, you can see how GJ has been moving up from this zone here. So guys, currently what you are seeing on GJ, it rejected this zone here. It went up, rejected, went up, and rejected again. So from this zone it started pulling back downwards. As you can see, we can put another zone here which acts as a support. You can see when GJ came to this point here, it started buying again. So this is how you analyze the market to define or understand where to get in or get out. So in this case, you can see GJ has been buying from this zone on the 4-hour time frame. So for our expectations, we can expect GJ to either come here and reverse or break above and continue going up. So that's simply what you are looking into. So but at the moment we are not seeing any entry at this zone. We just wait for the market to reach here, then we can reverse. So in that case, before you getting in any market, you have to understand and have an arsenal of different confirmations on why you are entering a trade. Like in this case, you can see here we had a support zone here, or a supply zone, rather a demand zone. You can see the market came here, but it failed to go any further down. But from here now, it will be a good entry. Probably you would have set your buy orders at this place here and expect your take profit there, and probably put your stop loss there. So but that's how you would analyze the market. But for now, we're waiting for the market to reach there and see whether we can get another entry. In this case, let me show you another example on AUD/USD, a trade that I took earlier. You can see on the daily time frame, Aussie dollar was bullish from this zone here. It went up, and once it got to this point, it rejected, came down, then it went up again, forming rather a pattern that would call an M pattern. So that's what I'm expecting for the market to do. But before this downward movement here, what made me get into the trade is, you can see on the 4 hours that we have a supply zone here, or rather what we'll call a resistance zone. The market, once the market was here, it rejected and failed to close above this zone. Then it went all the way down. Then on this zone, when the market was going up, you can see it rejected again and tapped on this zone. and rejected and failed to close above. So this is when I came and set my sell limits, because of another thing, guys, you have to understand also is the candlestick chart, but we'll talk that on a subsequent video, not today. So you can see here we have the bearish candle here engulfing the bullish candle. That's what we call a bearish engulfing. It's also another sign of bearish signs in the market. So that's what made me get into the trade, and you can see I'll share a screenshot of how the trade is faring. Up to now, my target probably will be to get out from here, but since it's a Friday, then I let the trade run till next week to see how the market will behave. But currently I'm on profits. So simply, guys, you can see this is a very simple way of analyzing the market technically, by just looking at what the market has been doing in the past to determine what the market is probably going to do, because the market operates with what we call human psychology. So simply, at different levels, the market tends to have turning points, because that's how the mass psychology functions. That's how people think in the markets. So, and that's how simply the market is driven by fear, greed, and emotion. So once you understand that, you will know how to position yourself to profit from the market. So in this case, you can see how we got this trade and how it's running. I'll share the screenshot, and that's how you can. So for me, I will be waiting for the probably for the trade to get all the way down here, or even on the higher time frame. You can see on the daily time frame we could go all the way to down here to form an M pattern, which is also another form of chart pattern that we can talk on other videos. For example, if you look at this zone here, the market tapped here, went down and failed to break above, then it went down, forming sort of an M pattern that I'm talking about. You can see from here to this zone, to this zone, to this zone. That's an M pattern. So that's what I'm kind of expecting at this place here. So let's see by next week how the markets moves. For now, I leave it at that, guys. That's what how we analyze the market.